In this presentation, we will take a look at payroll reports after having run payroll with a new payroll item related to group life insurance and compare and contrast the change in reports to reports we saw in the past before having added the new item of group life insurance within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the open windows open. In order to open the open windows, you go to the view drop down and select the open windows list. We're going to go to the reports up top and start off with the balance sheet and income statement just to overview our main two reports, and then we'll go into the 941s and W2 and W3. Reports, company and financial, we're going to go down to the balance sheet. We're going to change the date to 12/31/21 or 1/8. And that's going to give us, note all we have are the paychecks here. So here are our paychecks and the payroll liabilities, which we haven't paid yet. They're grouping all the liabilities together. That's the default for QuickBooks. We're going to take a quick look at the profit and loss by going to the reports drop down, company and financial profit and loss report, changing the dates from 01/01/18 to 12/31/18. And we can see that it's grouping everything into, once again, the payroll expense, even with the new items we're adding here. This including the gross pay and the payroll taxes for the employer. We'll talk more about that and how that grouping works at a later presentation. Now we're going to run the payroll reports as if this is the payroll end as of now. We'll look at the quarterlies, the 941, and see what the W3 and W2 would look like if we were to run it at this point in time. We're going to go to the employees drop down. We're going to go to the payroll tax forms, W2s, and process the payroll forms. And we're going to take a look first at the form 941. So we're going to go to the 941, just double click on that item. This is the paid version, of course. You can't really process the forms in the manual version, but you can look at the reports for them. We are currently looking at the third quarter now for the 941s. It's solidly in the third quarter because we had the month of July and we paid it in August. And both of those months are in the third quarter. So even if we're thinking about accrual or cash basis, the reports will be on a cash basis, but in either case, we would be solidly in the third quarter here. Third quarter ends in September. So January, February, March, first quarter, April, May, June, July, August, September. So we're in the third quarter here on 9/30/2018. We're going to go ahead and say OK and run that report. I'm going to say next here and next. Here's what we have. Let's think through these numbers. Now, what's going to be included here, it looks like it's going to be 2 paychecks. And that would make sense because you would think on an accrual method we would only have one because it would be for the month of July that we have in here. However, the month of June, remember, was paid in the first day of July, and the month of July payroll was paid in August. So really the pay period or the pay dates were 2 of them. We had one pay date, the check went out in July and August. So just keep in mind when we group this together, we got to deal with that kind of timing difference with regard to when we're going to be grouping the information together on a cash basis for the 941s. Now, if we look at the pay then, we're going to say that there were 2 paychecks from one employee. We know that their gross pay was the same. So it was 4062.5 times 2. So you would think that we would have one of these numbers here, that's all these 3 are supposed to represent the gross pay for 2 pay periods to be the 8,125. They're not here because we've added some complications. The closest ones are Social Security and Medicare. And you'll recall that some of the differences that we had now is we said that the 200 that we just put into place with one of the 2 paychecks is actually going to increase the number here for the Social Security and Medicare. So to get to these 2 numbers, we'd have to add that 200 related to the group life insurance that we had. And prior to that, we had a $25 item that was going to for insurance. I can't remember if it was dental or vision, but one of the insurance items was going to be reducing these 2 items, and that happened for both paychecks. So both paychecks, minus 25 for one of them, minus 25 for the other. That's how we get to our $8,275. So here's our $8,275. That's what we're going to have to use for Social Security and Medicare to double check our tax by multiplying times with the 1.25 to get to the employer and employee portion. So this will match what's on the paycheck stub if we add up the employer and employee portion, and we can double check it by getting to the Social Security wages in this way, which is getting a bit more complex. If we compare that to the FIT wages, so if I take this number minus the 7869, we get the 406. There were 2 paychecks. So if we divide that by 2, then we're going to say that what is that? That's the 203 for the 401k. So the difference between these two are usually pretty easy to reconcile because it's going to be the 401k. And the changes to this number can be a little bit more confusing because they're not included in the gross pay really at all. So that's how we would get this number. This number is going to be directly from whatever's on the paycheck stubs because whatever the computer calculated is what it is. We can't recalculate it because it's too complicated if we had multiple employees especially. And then these we can recalculate. So we're going to have to do that and actually come up with the Social Security wages. And it's nice at this point with all the different items we have here for the computer to help us do that. If we do so, then it'll add up to our 2 paychecks that we had, and that'll give us our payroll liability. We haven't paid it yet, so that's where we are at this time. So I'm going to close this back out, and let's see what would happen if we ran the W2 and W3 at this time. So we're going to scroll down just a little. We're going to double click on the W2 and W3 and see what we have there. It's going to be for 2017. We want 2018. So 2018 and OK. And we'll let it process this and review and edit. And next. Okay, so now this is going to be for the entire year. So if we added up the 941s for the 3 quarters we have so far, this number should tie out to what was on the FIT wages for the 3 941s. And then the Social Security and Medicare here are going to be, notice they're larger. The Social Security and Medicare, this number minus this number, will be shown here in the difference by box 12. So if we subtract this out, if we take the 28,562.5 minus the 27,344.5, that's going to give us the difference of 1,218, which is, that's going to be the 401k that we've been putting into. Reconciling between this number and the gross pay is getting a little bit more confusing as we add some of these items here. So let's take a look at it in Excel. If we were to just have a quick calculation, this is the amount that we paid per period. So we paid this much per period. There's been 7 periods so far, so the wage should be the $28,437.50 that we would have at this time. Now we've added the life insurance of $200, but that only happened for the last paycheck, 1 paycheck. That's $200. And then we had the vision, which was going to be reduced, and that happened for 3 paychecks now in our calculation so far. So that's 75. So this amount of gross pay times 7 would be the gross pay if we didn't have these other items, the life insurance and the vision. The life insurance is going to be added for Social Security and Medicare. It only happened for 1 paycheck so far, which is $200. The vision happened for 3 paychecks, which is the 75. So this is where we would think we would be at. Plus, we're going to say the insurance is added to it minus the vision here, and that'll give us the $28,562.50. So that's going to be the $28,562.50. So obviously, as we add some of these items, the payroll gets a bit more complex here. We have D that's going to give us the reconciliation between these two, and then C is going to give us that life insurance, which is affecting the Social Security and Medicare here. The retirement plan, of course, is still checked off. The SDI for the California and the California and state taxes down below. For more accounting information and accounting courses, visit our website at accountinginstruction.info.